Good afternoon, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I wanted to discuss earnings here on Fitbit. So anytime I approach an earnings trade, there's a pretty healthy list of criteria that I like to see. One of the first things that I'll start looking at to decide, do I have any reason to be involved with this at all, is the implied volatility, because that's the main thing that we're trying to take advantage of with our earnings trades. So when we look at this front week series of options, you can see we've got 161% implied volatility, and generally speaking this trades more in the 60 to 70 range. So we are sitting at twice that implied volatility, and we've got a weekly contract, so we've got a reason to at least be looking at this. Now that I've determined that I at least want to play it, I'm going to come back to the chart, and I first will reference the weekly and say, do we have any type of squeeze play in here that would give me direction? And in this case we do not. So I'll drop it back down to the daily and look for the same. Now this is a little tricky because we have a one dot squeeze that has just started to form today. What I'm looking for more is a situation like this, where you're looking for a squeeze that has been in play and that could continue to drive price. Ones that are starting to form just the first day are a little bit trickier to play as far as that, so I'm not really going to use it in my consideration for this setup. At the end of the day, I look at this chart, and regardless of what your opinions of Fitbit are, I say it's bearish because it is below your broad moving averages. Now it is pulling back down into the 21 EMA today, so maybe that's a little bit of an area that you could vouch for support. But ultimately, I would say that this is a chart that is range bound around 13 from a shorter term perspective, and then bearish in the big picture. So as I try to think about how I'd like to get positioned from that, I always start my earnings thoughts with thinking, start with a short straddle and work your way back. Okay, so the short straddle would essentially imply selling the 13s. Since I'm going to bend this a little bit and go with the trend, that's where I'm going to come back over to the options tab and instead focus primarily on, instead of doing the straddle, going with the trend and primarily utilizing a short 13 call. The way that I've been doing that here often, or the most here lately, is through these unbalanced butterflies, and we can kind of compare and contrast the difference between these and just a short call spread. So I will always drop these out to at least be $1 wide to begin and analyzing them. Of course, I am selling these a tiny bit in the money, as the underlying is trading there at $13.21, but we're able to get a 30-cent credit on it. Another part of where these trades will always click for people, or at least say, oh, okay, I can see why that becomes worth looking at, is when you throw this into your risk analysis graph. And once that refreshes, the main thing that I'm trying to point out is that if this underlying does nothing, that is really the best case scenario for us, hovering right here in between, let's call it 12.75 and 13.25. That's where we'll really do well with it. By taking in a credit on the trade, if it just rolls over, then we still make money. And the only place that this trade hurts us is if the underlying does explode higher, and you're looking at, let's adjust these prices, because the easiest way to determine your risk in these, and you can see I've got a couple that I've been analyzing today, but if we just discuss the one that we've been looking at here in this video, currently it's going at about a 27-cent credit. So let's use 30 cents for easy values. If you take in a 30-cent credit, you have $1 wide on each side, so that implies 70 cents or $70 worth of risk. And I think that's the best way that I have found to trade Fit, and these are the orders that I'll be working here into the end of the day. So I hope you found that helpful. If this is something you're interested in, we do have one more edition of this course that's going to be going on from Wednesday into Thursday. We'll be able to trade these earnings reports live with John. So if this is something you're interested in, we'd love to see you there. Otherwise, I will see you at the next free video.